the technicals now, we are joined by Aditya Agarwala, who's the head of research and investments for Invest4edu. And from a research team, we are joined by Ria. Hi, good afternoon to both of you. Thank you so much for joining us. And let's get started with all the stocks that are in focus today. First up is Tata Motors, that is in the slow lane or not. Well, the results show that it is a bit of a disappointment coming in, but the stock is still up, trading with gains of 1.4%, and that is on the back of the brokerage notes. And we'll see what they have to say. But first, let's take a look at how the numbers have panned out. The revenues are seeing a downtick of 3.5% on a year-on-year basis. The net profit is down 11% on a year-on-year basis at 3,343 crores versus 3,764 crores in the previous year. The EBITDA is down 4.2% on a year-on-year basis, and the margins are also seeing a downtick of 144 basis points at 11.6% versus 13% on a year-on-year basis. But Jefferies is maintaining a buy on the counter, but they've cut the target price to 1,000 rupees per share. They feel that the quarter two has been weak, but they expect a better second half. JLR is facing a tough macro in China and Europe, but the quarter two was also impacted by the aluminium supply constraints and delayed shipments, but they expect a much better second half going ahead. CLSA is also upgraded to outperform from a hold, and they've cut the target price to 968 rupees per share. They feel that the JLR EBIT margin guidance of 10% in FY26 remains intact, and the negatives are largely priced in. So decent notes coming in from the brokerages on the back of that. Tata Motors is doing pretty well in trade today.
Okay, so that's Tata Motors on the back of fundamentals and largely quarter two earnings and what brokerages are making of it. But Aditya, you've also picked out Tata Motors on the charts for us. Now, this stock has been a slow mover and it's been in the red. In fact, negative returns 1 month, 3 months, 6 months. Last 6 months, in fact, the stock is down 15%. What's your take on the momentum going ahead, and what are the next levels that you're spotting for this stock?
Hi, good afternoon, Snehi. Good afternoon, Ankita. Thanks for coming to the show. I think Tata Motors has done its bit as far as correction is concerned, and I think this negative result was already priced into the stock prices, and we've seen a correction in the stock, as you mentioned, over a period of time. From the recent high, stock had corrected significantly, and what we are witnessing is after results, stock has bounced back. Even though the results are negative, I think the management commentary has been positive. Looking at the chart setup, stock did take support at the 50% retracement of its entire move from 400 odd levels to about 1100 odd levels, and then from there stock has bounced back in trade today, and I think it has more legs on the upside. Definitely stock can test levels of about 950 on the upside to about 925 to about 950 is where I'm looking at the targets on the stock, and given the risk to reward is also extremely in favor of going long at current levels, I would maybe place a stop loss just below levels of 780, which happens to be a strong support area, as I mentioned, 50% Fibonacci retracement level, and look for a decent target of 950 on the upside, Snehi. And along with that, if I plot an RSI, it is showing a positive divergences on multiple time frame chart, and it has bounced back after taking support at the 30 level, which was the oversold zone for the stock. So overall, it's a healthy looking chart setup. After a correction, the risk to reward is in favor of going long. So I would definitely stick my neck out and go long on Tata Motors with the stop loss just around 780 and look for a target of 950 on the upside.
Right, so a buy call coming in as far as the technical charts are concerned, a target of 950 on Tata Motors.
But on that note, viewers, let's keep it going with all the big buzzers in today's trade. And I want to talk about a stock that's deeply under pressure right now, and that's Advanced Enzymes. Now, if you take a look at this earnings candidate on the back of its quarter two numbers, consolidated revenue has come in at 146 crores versus 158 crores, which is down 7%. Net profit has come in at 33 crores versus 34 crores this time last year, down 5%. EBITDA has seen quite the fall at 42 crore compared to 51 crores, which is down 17%. And EBITDA margins have also shrunk quite a lot at 29% compared to 32.5% year on year. Now, if you take a look at the geography-wise sales, US sales, which make up 39% of the revenues, increased by 21% year over year, while there was a degrowth of 35% in Europe, 25% in Asia, this does not include India, and 49% for the rest of the world. India sales, which make up 48% of the revenue, also declined 15%. Meanwhile, on the FY25 outlook, the company said that they're constantly working towards improving and strengthening its business model and will continue to focus on all three divisions: human nutrition, animal nutrition, and bioprocessing, including developing, adding, and launching more products in the target market of probiotics. On the back of these weak set of numbers, the stock is up stock is down more than 12.5% as we speak.
All right, moving on then. Aditya, we'll come to you. You've picked out a name from the auto space, Balkrishna Industries. Now, this one has been in a consolidation mode in the last 1 month. In fact, Nifty Auto has been in a consolidation mode in the last 1 month. Tell us, do you see the counters to start moving from now on?
I think so, Ankita, because stock is very close to its key support areas. And if you take a look at the previous lows, it's been around 2780, 2750, and stock is almost there. It's also close to its 200 DMA. And given the fact that the stock has already corrected significantly, I think these are good levels to look at the stock. Once it starts to trade beyond 2850, 2880 on the upside, stock can test levels of 3000 to about 3100 on the upside. And plus, if I plot an MACD and an RSI, both are indicating that there could be a pullback in the stock, as RSI is sitting at extreme oversold zone and MACD has already made a crossover with its trigger line. So overall, it looks like it's a good risk to reward trade to take, with the stop loss just around 2700, and you can have a potential target of 3000 to 3100. Balkrishna Industries, I think, is something which traders can definitely look at.
Alright, that's Balkrishna Industries. But keeping with the auto pack, let's get Ola Electric also in the picture, because that's an earnings candidate, and Ola Electric's losses seem to have narrowed. Let's see what the numbers look like. The revenues are seeing, the revenues are up 39% on a year-on-year basis, on a consolidated basis. The losses have also narrowed to 495 crores versus a loss of 524 crores on a year-on-year basis, and the EBITDA loss has also narrowed to 279 crores versus a loss of 386 crores on a year-on-year basis. You can see an uptick of 1.5% coming in Ola Electric. BOFA is maintaining a buy, but they've cut the target price to 120 rupees from the earlier 145 rupees. I feel that the gross margin delivery has been steady. They're addressing the reach and service hiccups, in the near term, and also the EV adoption acceleration and more launches on the anvil are likely to be a big positive for Ola Electric. And on the back of a bullish note, and of course the narrowing losses, Ola Electric is up 1.5% in trade.
Okay, so that's on Ola Electric. Before we talk about the next stock, just want to quickly draw your attention to what the markets are doing right now. It's a sharp fall, in fact, coming in for the Nifty as we speak, because you have Nifty that's just tilted towards the red. 0.1% lower is where Nifty 50 is right now. 1% drop from the day's highest point. Sensex also 0.5% lower. Broader markets continue to be falling as we speak. However, it's Nifty Bank that's doing pretty well for itself right now. But well, yes, Nifty has moved over to the red and is in a bit of a pressure today.
If you like this video, then like, share and subscribe to ET Now.